Welcome back, guys. So this is USD JPY on the weekly time frame. So this is what I'll be looking out for next week. So we can clearly see that we're in an uptrend because we've been making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So the most likely place the market is going to draw to will be this high. Although we have another high that has formed here, this high formed, this week that just closed. So these are the two likely targets, this and this. So but primarily we are bullish on this. So how do we determine our bias and our trend? Now we are coming from this weekly fair value gap. This is a very important point because you have to know where the market is coming from, where it is at the moment and where it is likely to go. So the context here is we are coming from a weekly fair value gap. Okay, the first concept is we're in an uptrend. The second is we are coming from a weekly fair value gap. Now this is the reaction off of that weekly fair value gap. Now we've seen this bullish candle and this bullish candle. This one has closed above this. That's a clear sign of the market being bullish. Now that we've gotten this context on the weekly time frame, because this weekly fair value gap is a driver towards this high, so we have to go down on lower time frames to see what the market is doing from this point. It's going to be a top-down analysis. So let's go down to the 1 day time frame, to the daily time frame rather. So go to the daily time frame. Now here it is. This is the daily time frame, and what has the weekly done here? What has the daily done off of this weekly fair value gap? The daily came here, acted like it was going to take this high, but did not, and came back. And this reaction here, this whole reaction here is a whole other concept on this move here. I will explain that briefly. So let's go back to the weekly time frame. So I will explain what that move means. So on the weekly time frame here, we look for the body closure of this high. And how do we get that? We switch either we switch our chart to the line time frame, to the line chart, or we take the body closure of these candles. So now the close of this candle is going to be 156,400. 156,400. Let's put a line there. 156,400. 156,400. So 156,400. This is the closing point. This is the closing point of this candle and the opening of this one. So this forms like a resistance here. This might be a hindrance to the market. This might hinder the market from getting to this point. This here can hinder this market from getting to this point, which is why that move on the daily time frame happened. Now let's go to the daily time frame and see the reaction from this price range, 156,400, and let's see what the market did from there. So you see, the market moved up to this point, which is the closing and opening price of that weekly high, then came back down. Now it acted as a resistance, because if you're buying from here now, because there is break of structure and all of that, ignoring that, it might lead to a loss. Although this wasn't a loss, but it can lead to a loss. So I have to consider that. I will make another video about that concept, closing and opening price of a high or a low. But for now, let's focus on what we're waiting for or expecting next week. So now on the daily time frame, we've gotten this reaction here, and we still came back up into this point regardless of this. Now we don't consider this anymore because the weekly candle has closed above it. This weekly candle this weekly candle has closed above this level now. So you see, it's not going to be a hindrance for us again to get to this point. The only likely hindrance we have is this other one, this closing price and this opening of this candle forms another high. So putting that in consideration, we'll have to, be mindful of this level. Even if we are targeting this level, we'll have to be very watchful of this level here. So let's continue. Go down to the daily time frame and see what the daily is doing. Now, considering the fact, or knowing the fact that the weekly candle has closed above this line here, we are waiting for and has formed this order block on the daily favor on the daily time frame. So we are waiting for a reaction on the daily. So the market has come into this daily order block. That's coming to this daily order block. That's coming to this daily order block. Now that we're in this daily order block, we have an opposing fair value gap from the same time frame, which is the daily. So, but this is going to be our red zone. This red zone is, another of my concepts. I think what I'm going to do is I will make a playlist for all of my concepts, so that anyone that comes to my channel, you can go to my concepts and get, the background of the concepts I use, like this red zone, this close and opening price of a high or low, so that when I'm explaining these things, you will be able to put it in the right context. But for now, let's focus on the outlook. So now we have gotten this on the daily. This is going to be a red zone. It's going to be a red zone because it is likely that the market now is going to be a battle between this order block and this fair value gap. So it's likely the market will do this and drop, and it's likely to do this and continue going higher, and we target this point or even higher. So now that we've established that if we have this obstruction here, how then do we bypass it? Because if we say we want to wait for the daily time frame candle to close above it, we might get a straight parabolic daily candle that just goes to our target without even giving us an entry. So what we do is we align the time frames. We align the time frames in a way that we'll be able to get an entry on the pullback, considering a trend from here on a lower time frame, considering a trend from this daily order block on a lower time frame. Then when it gets to this red zone, which is going to be an obstruction on the daily time frame, we watch what the lower time frame does on that red zone to know if we're going to continue higher or the market is going to drop. So here it is. So from the daily, based on the time frame alignment, I go to the 1 hour time frame. 1 hour time frame. Although there are some scenarios that I will use the 4 hour, but most scenarios I use the daily. So I'm going to be doing a trade review about all my trades, so you all can get the concepts of these terminologies that I use. So when we are here right now, for this scenario, we go to the 1 hour time frame to see what the 1 hour is going to do in this red zone, what it is going to do or what it has done already, as at this point we're discussing. So let's go to the 1 hour time frame. We go to the 1 hour time frame to see what the market has done there. So first things first to consider on the 1 hour time frame, we have switched from a downtrend to an uptrend. You can see it by drawing this trend line, although I don't use trend lines, but if you use trend lines, it is clear that we've broken. I don't know how many touches, that's why this trend line concept is so confusing. I don't know if it's going to touch here, but just drawing it randomly, you can see we've broken off the downtrend and we are now going up. So now that we're here in this red zone, this is where we tapped into the red zone for the first time. Logically, this is supposed to do something like this. Tap into this red zone, being that daily red zone, which is the daily fair value gap, that acts as an obstruction for us to get into this point. So logically, what it's supposed to do is supposed to continue downwards, breaking these lows or even going lower below these ones. But here is what it did. It came, dropped. Now this is the reaction. we got here. It came, did this. Now this is showing a sign that this fair value gap is not going to hold. Remember, this is a fair value gap on the daily time frame, so it's showing signs that this is not going to hold. Then we see a breakout here. When we see this breakout, this is a clear sign that we are supposed to buy, considering the fact of our context being bullish and our buyers being bullish. So considering this has broken above this level. This candle has broken above this mini resistance caused on the 1 hour time frame and also on the 4 hour time frame. I'll go to the 4 hour time frame. You will see that it's also here. So why I'm using the 1 hour time frame is because if it had been a case of the daily coming here and printing a bullish if it has been a case of the daily came here and printed a bearish candle on the daily, then I will be using the 4 hour for this concept. But this did not happen on the daily. It happened primarily on the 4 hour. Happened primarily on the 4 hour time frame. Happened primarily on the 4 hour time frame. As you can see, here is that entry into that red zone. Here is that drop. So technically it happened on the 4 hour time frame. So you can still take it from here, but why I prefer the 1 hour time frame is it gives me an early breakout and retracement so I can enter. Sometimes if you're waiting for this 4 hour, it goes up and goes and goes and goes and doesn't come back. So establishing this now that we have seen this, this is even a double confirmation for it to break out on the 4 hour. This is a double confirmation. So let's go back to the 1 hour time frame, which is how my time frame alignment works. So now that we have come to this back to this 1 hour time frame, what I'll be looking for now is a way to enter my trade, so it will give me a good risk to reward and my stop loss going below this low here. So it's going to be something like this. This is my stop loss goes below here. My take profits goes, remember we have that level on the weekly time frame, so we're also considering it. Now I will need a good risk to reward, so I will get my position to at least 1:2 risk to reward, so that when we retrace and come down here, I can get an entry. Or even if we don't retrace, then it becomes a missed trade. It happens sometimes. So this is basically my bias for USDJPY next week. So I will see you guys on another video. Bye for now, and do not forget to manage your risk. Do not overtrade and always trade according to your plan.